NBT World, a vision of Thailand.
If you look at the applications in the first quarter of this year, it's again an all-time high. It's like over 400 billion baht, which is an all-time high. So again, from both sides of the geopolitical spectrum, they're interested in investing in Thailand. So I think we, as a country, we have positioned ourselves as being neutral. As a company in operating here in Thailand, I think that's something that one would also have to keep in mind, that we need to to diversify, right? We need to be friends with everyone, basically,
Right.
in this kind of environment. So both in our supply chains and both in our markets as well, right? So we need to diversify. So I think even with companies, it's important to be friends with everyone and not choose sides.
Swadika, welcome to Thailand Today. I'm Sandra Han Utsaha, your host. From rising prices at the grocery store to warning signs for small exporters, the global economic chessboard is shifting fast. With a potential 25 to 200% tariff wall going up around the U.S., Thailand sits at a critical crossroads. Do we suffer the blow or do we seize the opportunity? Joining us today is Dr. Girida Paupitit, Director for TDRI Economic Intelligence Service at the Thailand Development Research Institute, or TDRI, who will break down what this new era of trade conflict means for small business owners, everyday Thais, and foreign investors alike, and how Thailand can play its cards right amid the chaos. Swadika, Dr. Girida.
Swadika.
It's so great to see you again. You are one of our favorite guests, not just in times of chaos, but even when times are good, and hopefully times will get better as we go along. So let me dive right into the question. So, a lot of Thai products could soon face higher taxes when entering the U.S. because of the current threat of the imposition of U.S. tariffs. So how serious is this for Thai exporters, especially small businesses, and could this really hurt our sales abroad?
I think it could. One of the reasons I say this is because even though there's so much uncertainty at the moment on what the final tariffs the U.S. will charge for each country or for each product, but I think one thing that we know is that the tariff rates in the U.S. will not go back down to zero as it was before President Trump had come up with these tariffs. So in any case, Thailand might not be taxed 36%, or China might not be taxed 145% as it is today, but it probably will be lower than that, but it will not go back to zero. So be prepared for a higher tariff. And it's not only the U.S. taxing other countries. I think there'll be retaliation from other countries as well, meaning that China will also raise its tariffs against U.S. products. EU might also raise tariffs. Mexico and Canada, will be also raising tariffs against U.S. products as well.
Right.
So this is going to be a global trade war, including non-tariff barriers that will be put in place as well. So I think this will affect global trade in general, right? So trade in the world will be growing at a slower pace than before. And this is what the IMF has also forecasted. So this is not good for an open economy like Thailand, because Thailand actually relies a lot on both import and exports. If you add import and exports that Thailand does, it's actually more than 100% of our gross domestic product or our economic value.
Okay.
So we are very open. We depend a lot on export and import. So if the whole world's trade is going to grow slower, right, that means our exports, not only to the US, but also to Europe, to Japan, to China, right, will also slow down. So in the future, I think trade in the whole world will grow slower, and also Thai exports will also grow slower as well. And I will come back and talk about imports, but I think imports will accelerate. So that is another impact that we have to face. But to answer your question, I think on the global scale, of course, we'll be impacted in terms of our exports. But in the U.S. market in particular, I think there will be two distinct impacts there. So one is the overall purchasing power in the U.S. might come down because things will be more expensive in the U.S. given the tariffs
Right.
on the products that they import. So overall, I think Thai products that we use to export to the U.S., for example, the top 20 Thai products, might grow at a slower rate in the future, right, in the future as well. And of course, there are certain products that are taxed, at a different rate. And what is important, I think, is not how much we are taxed, but how much we are taxed compared to our competitors, right? So if our competitors are taxed higher than us, then we might have a chance actually to enter the U.S. market to replace, those products. For example, if China is taxed at the end of the day 50%, right, and Thailand is taxed, let's say 10%, then we still have a chance to penetrate the U.S. market to replace the Chinese products. So this is what I mean by saying that the impacts can go both ways, but I think the overall impact is probably negative, but there might be some channels or some specific products that we might be able to gain market share in the U.S.
Right. So as you said, we may not face taxes all the way up to 36%, but nevertheless, we will be impacted. So it is serious for small businesses here in Thailand.
It is definitely very serious, but of course there are pockets of opportunity, as I mentioned, and one has to find those pocket opportunities that we can replace some of our competitors' products in the U.S. market.
And it's also serious because, am I right that the U.S. is our second biggest export market? Is that right?
The U.S. is Thailand's biggest export market, accounting for 18% of our exports, of total exports. But the Bank of Thailand has calculated that there are also indirect impacts, meaning that Thailand might send some parts and components, to Mexico, for example, and they assemble and then send to the U.S. and then export to the U.S. So there are all these indirect impacts as well, and that accounts for around another 4% of our exports. So totally, we probably rely on the U.S. market at around 22% of our exports. But it's 22%. It's not small, but remember there's another 78% that we rely on other markets, which is why I say if other markets also slow down, that means that Thai exports to those markets, and our other major market, actually the second largest is China, and then it's Japan and the EU. These are our big markets. If they slow down, and of course our exports to them will also slow down as well.
Okay, so speaking about indirect impact, some Thai products are made using Chinese parts, or some products are made in partnership with Chinese companies. Is there the risk of Thai products being seen as being Chinese products and then being taxed accordingly to the tariffs that are imposed on China?
Definitely, because this is something that the U.S. also looks very closely at. That's if any country is being used as only a transshipment, right, from China to the U.S. Just to evade the tariffs that the U.S. charges on China, and so the U.S. will look at these products as well. For example, we had now going to be faced with over 300% tariff on solar panels. Right? Because the U.S. has done investigation on this for the last 2 years and found that most of the Chinese companies have relocated to Thailand, Vietnam, Cambodia, Malaysia, and producing them out of those countries, and exporting them to the U.S. using very little local content. So the key here is the local content. If the local content is small, meaning that it's still using mostly Chinese inputs, then those products will still be deemed as Chinese products, although they're produced in other countries, and the U.S. will penalize or will tax these products higher. So the key here is that we should add more local content to any products that we export to the U.S. from now on.
Okay, and you actually talked about this in the first question. You were saying how there are some products that are being exported to the U.S. from China, and how there are products like toasters, toys, household goods that are mostly and almost entirely exported from China to the U.S. And given the tariffs, the average U.S. consumer will find those unattractive, right? And you said that there's an opportunity there for Thailand. So does Thailand have the capacity to ramp up production to perhaps slip in and take advantage of this? And can we fill the gap?
I think we can for certain products. For example, actually the product that is now being taxed the highest from China to the U.S. are syringes and needles.
Syringes and needles?
Yes, and it's now currently being taxed at 245%.
Wow.
Because at the end of the day, the 145% tariff that has just been hiked on China has to be added onto whatever tariffs that existed before. So it adds up to 245% at the moment. And I think China has a large market share of needles and syringes in the US at the moment. But because it's now going to be, right, about 2.5 times more expensive, Thailand actually is a country that is competitive in producing syringes and needles as well. But we now only have less than 1% share in the US market. So this is something that we might be able to ramp up, our share in the US market, as well as other countries as well, because even just Thailand itself will probably not be able to replace all of the Chinese syringes and needles in the U.S. So it's an opportunity for many countries, right, to gain market share there instead of China.
Okay, that's encouraging. So moving on, we've seen a big jump in foreign companies investing in Thailand in businesses like electronics and also data centers. Is this because of the trade war, or what is it that is actually driving this, and what does this mean for investors and the Thai economy?
Right, actually, we have seen the Board of Investment approvals of these applications of foreign direct investments that have come into Thailand, and you're correct. The number one, the largest value is in electronics and electrical appliance. And then number two are electrical vehicles, number three are data centers, and we also have even things like biotechnology, which is applied to the food or other products which are made from agriculture. So again, these I think are opportunities for Thailand because they are the new industries, right? That is in high demand in the world. They're low carbon, right? They are good for health and things like that as well. But again, I have to say that when the BOI approves, these applications, it takes around another 3 to 4 years before the factories are completed, operations or production, starts, and exports, start, flowing. So again, this is something that is good news for the longer term. And if you look at the last 2 years, the BOI applications, the Board of Investment application approvals were at all-time high, like ever. So this is good news. And the interesting thing is the investments come from both sides, both the Western camp and also the Chinese camp. So we're neutral. So we've been attracting investments from all sides. But to come to your question, to say that if this will probably be driving Thai industries in the future, I think it will. I think we have the capacity. But of course, there are certain things we need to do, right, to make this a reality. Such as one, we need to have skills of people, right, that can work with these more modern production, which probably use more robotics or automation. So skills of workers who can work with robots or can work with machines, or even digital technologies, will be helpful, right? Clean energy, for example, is something that most multinational companies require when they come. At least something to reduce their carbon footprint, right? That's something that they will need. And also, I think one of the things that Thailand already has actually, and it's going to be a plus for us, is we have very strong internet here. So anything to do with digital technology can piggyback on that very strong internet, which we have 5G across the country. So I think there are a few things that we will need to keep improving to attract and make these application approvals come to reality in the next 3 to 4 years. And I believe because of the current uncertainty, it might, the investment decisions might also be delayed. I don't think they'll all be canceled, right? Because again, when you look at these sectors, not all products are meant for the US market. For example, I'll give you an example. Most of the biotechnology investments here in Thailand, which again, as I mentioned, uses agriculture as its input, and we have plenty of agriculture and biodiversity here, and it's inexpensive. And biotechnology, what it does is it's add values, right? Like what is it? Plant-based proteins, right? Insect-based proteins, or even bioplastics, biofuels, or even cosmetics and vitamins. These are things that you apply biotechnology to agriculture, raw materials. And again, most of the investments that are coming in this sector are from Europeans because they want to produce and export it back to Europe. Right? So it's not, not all of the industries that I mentioned, even the EVs, electrical vehicles, are not meant for the US market. Right? They are meant for other markets. As I mentioned, US is only 18% direct exports, of Thailand total exports, right? But the other 82% goes to the other markets in the world. So I think we have a chance of still increasing our investment and production and export in the future.
Okay, so we do have to be concerned, but we do have that 82% cushion.
We do, and even in the U.S. market, as I mentioned, it depends on which products, right? And it depends on how competitive we are compared to the other countries that export to the U.S. as well.
Thailand, a land of success and reward. Reward your team with an extraordinary journey that celebrates their dedication and achievements. Immerse yourself in breathtaking natural landscapes. Indulge in the soothing touch of traditional Thai massages. Savor the diverse flavors of Thai cuisine. And experience the charm of a culture rich in heritage. Give more than just relaxation. Give lasting inspiration. This incentive travel journey is more than just a reward. It's an opportunity to strengthen team bonds, ignite inspiration, and create lasting memories. Discover Thailand, your ideal MICE destination. Inspire your team today. Welcome to Thailand, a premier destination where business seamlessly intertwines with world-class leisure. With direct flights from major cities worldwide, your next corporate event is just a step away. Host your conferences in Bangkok's cutting-edge venues, offering unparalleled facilities and services. Reward your team with relaxation on Phuket's world-renowned beaches, providing the perfect backdrop for rejuvenation. And don't forget to visit Chiang Mai, ranked among the top 5 mountain destinations in Asia, where majestic peaks and a rich cultural heritage await to captivate every traveler. This season, elevate your business journey. Choose Thailand, where every season is the perfect season for MICE.
Thailand is caught between the two economic giants, the US and China, right? And they're pulling us in different directions. So how do you see Thailand handling the pressure from both sides, and what should businesses expect next?
Well, I think Thailand has been handling it pretty well because, as I mentioned, the Board of Investment applications and approvals come from both sides, because we have been positioning ourselves as being friendly to all sides, and we are very welcoming. Companies from both China or even Hong Kong, or even those from Taiwan, from the US, from Japan, are all here, and they're still applying for board investment approvals, meaning that they're still interested in Thailand. If you look at the applications in the first quarter of this year, it's again an all-time high. It's like over 400 billion baht, which is an all-time high. So again, from both sides of the geopolitical spectrum, they're interested in investing in Thailand. So I think we, as a country, we have positioned ourselves as being neutral. As a company in operating here in Thailand, I think that's something that one would also have to keep in mind, that we need to diversify, right? We need to be friends with everyone, basically, right, in this kind of environment. So both in our supply chains and both in our markets as well, right? So we need to diversify. So I think even with companies, it's important, to be friends with everyone and not choose sides.
Okay, good advice. Be friends with everyone and diversify. Okay, but will we see we'll see price hikes and job losses? Is that possible?
Well, not at the moment. Actually, inflation in the world is coming down, right? I mean, global inflation is coming down. Inflation is nothing but just a year-on-year change in prices. So prices will still go up, right? Because inflation is still positive, but it will increase at a slower rate now. Why? Because as the global demand slows down, right, prices of goods will not hike, right? Because the demand is not growing quickly, but the supply remains pretty much the same. So prices of goods will not rise quickly. For example, oil prices are now falling, right? Because actually OPEC is planning to produce more oil, while as the global demand, right, is slowing down. So when trade, is not growing quickly, then that means manufacturing or production is not going to grow quickly. Demand for oil is not going to grow quickly as well. So oil prices are coming down, right? For example, this year, I think the forecast of oil prices is just about $65 per barrel compared to $80 last year. So again, prices in the world are coming down because of the cost side as well, right? Commodity prices are coming down. So I don't see an increase in prices in other countries. In the US, it might increase. Prices might increase because of the tariffs.
Right.
Right. But in other countries,
in Thailand?
In Thailand, no. In Thailand, actually, this year, the inflation is forecasted at only 0.8%. So even below 1%. So it's low. Inflation is low here as well because the oil prices are coming down as well. Right. So again, no, prices are not an issue at the moment. And I think the other good news is also when prices are not rising quickly, interest rates are also on the downtrend. Okay. Right. So across the globe, we're seeing interest rates being cut by the central banks, right? And when central banks cut their policy rate, that's what it's called, the policy rate, commercial banks will follow as well. So in the whole world at the moment, the trend for interest rates are coming down. In the U.S., the Fed has just held it stable. It hasn't cut, but the forecast is that the U.S. should cut its policy rate or the Fed rate 3 times. In the second half of this year by 0.25% each time. In Thailand, it has just been cut. The policy rate was cut in February and in April, 0.25% each time. And we forecast that in the next rest of the year, it might be cut another 2 times. So for this whole year, our policy rate will fall by 1%. Okay. Right, by 1%. And commercial banks will follow, but they usually don't follow 100%, meaning that not 1-to-1. Usually they follow by half. So if the policy rate is reduced by 0.25%, commercial banks usually cut their lending rate by 0.125 at most.
Okay.
At most.
So for the regular Joe, the average type person like myself who has very little understanding of economics at all, what does this mean in terms of employment?
Well, in terms of employment, okay, first of all, before we go to employment, right, what it means to you is that things will not be, prices of stuff that you buy will not rise quickly anymore, right? That's good news, right? If you have debt, that means that your interest rate that you will pay will probably come down, so that's good news. But if you want to borrow more, that's another issue because banks are not really willing to lend at the moment due to the fact that they're afraid of people not being able to pay back and things like that. So that's another issue. But but if you already have debt, that means that the interest that you'll be paying will probably be a little less because interest rates are coming down, right? So that's on that side. But in terms of employment, I think it all depends on which sector you're in, right? So, for example, if you're in the sectors that are growing, right, are doing well, right, then of course employment is still there, right? So, for example, as I mentioned to you, there's
biotechnology,
exactly, or even electronics, right? And that's still expanding. So, those are industries that will still be hiring people and there. But if you're in sectors that are, let's say at sunset, as I mentioned, right, or are facing a huge competition from abroad, and we're not as competitive, for example, as textiles or plastics, right, or even steel, petrochemicals, right, that will definitely impact their employment as well. But for example, if you're in the tourism sector, right, it's still growing but slower than in the past 2 years, right, because we're seeing tourist arrival numbers, right, they're still growing but at a much lower growth rate than in the previous 2 years, for example. So it depends on which sector you're in, but I think overall in Thailand, unemployment is still very low and it will remain low, and because we're still expecting growth here, right? We're not expecting a contraction like in COVID times, right? So we're still expecting maybe 1.5% to 2% growth this year. So in our economy, so I think there's still going to be employment.
So can Thailand actually benefit from the U.S. buying less from China? And are there real chances for our workers and local businesses?
Well, as we mentioned that, I think there's a chance that we could increase some products, of our export products in the U.S. market, right? And that's a chance, but we have to also look at our competitors as well. As I mentioned, as you also mentioned, there are things like, syringes and needles or toasters or toys, right? That Thailand could also produce, but for some of them, like toys, maybe, Vietnam can produce at a cheaper price, or Cambodia can produce at a cheaper price, right? So we are not competitive in toys, for example, right? Or even in shoes and garments, for example.
So we have to take a look at what we can do.
Exactly, and also look at the tariff rates that the U.S. will charge on the different countries as well, right? So if our competitors are charged a much higher tariff rate, then we might be able to export, even though our production costs are a bit higher than our competitors. So there are many factors to look at, but I think there is still a chance for us to increase our market share, for some products in the U.S. because the U.S. is going to import less from China on those products.
Thailand, we have been stuck in the middle income trap, and it seems that we're still stuck. What can you say about this?
Well, we have been upper middle income country. I mean, we've moved from a lower middle income country to an upper middle income country, I think about 10 years ago. And we're still in the middle income, but we're upper middle income right now. And I think the move towards a high income, will be more difficult at the moment because as you grow, eventually you become high income. But if you grow slow, it means it's just going to take you many, many more years before you get to the income per head or income per person level that qualifies a country for a high income, right? Because that's a definition of high income.
How far away do you think we are?
Well, we're still pretty far away. We're still pretty far away because I think for the moment, if I remember the figures correctly, to be a high income country by the World Bank categorization, I think the income per person per year would have to be over $20,000 US, right, per person per year. Thailand is now at around 8,500, if I remember correctly. So,
okay.
so we're still some way away. So again, if we grow slow, then it will take us even more years, right, many more years to get there. But I think at the moment, given that global trade is slowing down, and we rely a lot on exports, right? 60% of our economic value are exports, as I mentioned. It will make Thailand grow slower, right? That's one thing. But the other thing is we're also facing a lot more competition now, right? Given that many countries cannot sell to the U.S. market, they're selling it to Thailand as well. So we're facing competition on steel, on petrochemicals, on textiles, not only from China but also from other countries as well, right? That want to export to us because their products are high quality and they're cheaper than those that are produced in Thailand. So it will definitely affect our manufacturing growth going forward as well. That means the country or the country's economy will grow, will not be able to grow at 4 or 5% anymore, right? So it will maybe grow at only like 2% or 3%. That means it will take much longer time for us to reach a high income status.
Going there slowly, but hopefully surely.
hopefully.
Right. And one last question. We've got an aging society, and with this economic uncertainty right now, plus the aging society, how can the average Thai person cope?
Yeah, that's right, because we're also aging. So I think one of the things that we really need to do is also, as a Thai person, we need to diversify. Right? We need to diversify. If you have only one job, I would suggest that you upgrade your skills so that you can do more than one job, because you never know. Right? Like during COVID, we learned the lesson the very hard way that if you have only one job, it's very difficult for you if that job goes away. But if you have more than one, then you still can rely on other jobs. So I think that's one thing. But I still think at the end of the day, digital skills will still be very important, because technology, no matter what happens, will still progress, right? In digital, in AI. So that is something, is a foundation that you could use to diversify your skills or your jobs in the future. So I think that is very important as well, but also in the sense of diversification of your investments, right? Or even your savings. You have to diversify, right? Don't put all your eggs in one basket, because you never know what happens. Put some gold into your investment, right? Rather than just put money in a bank.
Especially with the prices the way they are right now. Gold.
Right. And with lots of uncertainties, it's always good to have some gold in your portfolio as a cushion, maybe 5%, right? And do diversify. Don't only invest in the Thai market. Invest also in markets abroad as well. Meaning you can buy mutual funds that invest abroad as well, right? So these are like investments / savings as well. So I think it's important for you to diversify in terms of markets as well, right? Or even as supply chains as well. If you are, if you're buying and selling, do diversify your suppliers, but also try to get new groups, new segments of your market as well. Because you know, in a world like this, I think anything can happen. So you need to hedge, basically.
Right. Anything can happen. So diversify any which way you can, not just in your investments, but also in your skills.
Exactly,
Okay.
exactly.
Great advice. It's been wonderful speaking with you. Thank you so much, Dr. Kirida. ขอบคุณค่ะ
You're welcome. ขอบคุณค่ะ สวัสดีค่ะ
As Dr. Kirida shared, this trade war isn't just stats. It's about who adapts and who pivots, and there is room for opportunity. Thank you for watching Thailand Today. สวัสดีค่ะ